Good morning, guys. How are we all doing? Happy Monday, everybody. Welcome to the new trading week. Hope you guys have all had a great weekend. I am Dan from Trading with Dan. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. So first things first, this wedge that we drew in when we'd only had this bit of price action up to this point, we can probably adjust now to what may end up being a more efficacious pattern. I mean, it even kind of lines up to that bit as well, but yeah, we'll draw this in here because we are obviously having pretty much a third move off that trend line. So if we then extend the top, so yes, we could potentially be in an ascending, a rising wedge still, which could still get us up to 25,000. That is not to say we can't just break out of the top of it and continue to the upside. But yeah, we'll keep an eye on, well, at the moment, this obviously upside trend line. We clearly have this level of support below as well, which ultimately, for the time being, will coincide with this trend line as well. So yeah, all things looking a lot better this morning than they were when it was looking like we could break down through this support level. But yeah, at the moment we're accelerating away, not taking out this high or this high yet, so obviously we've got work to do. But yeah, it's not looking too bad. We have got inflation numbers this week, so we potentially have a catalyst. What I think the market definitely needs to be aware of is that we've had a substantial rally in stock markets, and if we do get that better inflation number, i.e. lower inflation number, it could very easily have been a buy the rumor, sell the fact, and we could get a sell-off, catching a lot of like I say, more inexperienced, but traders that aren't necessarily that don't know about buy the rumor, sell the fact, like scratching their heads wondering what's going on. But obviously that won't be a bad thing. We'll maybe then get a pullback. We'll maybe then trade downwards to size for a few days, maybe even a few weeks, and then start to trend back upwards after putting in a nice healthy higher low. So yeah, not too much to look at in here. We'll come back and look at stochastics. But yeah, like I was saying, if we look at this, we could maybe move into this zone and then pull back, take out this, grind down lower, back to this support here, and then around the 4K, and then take another leg to the upside after putting in a higher low in this area relative to these lows. That is a possibility. Obviously, the other possibility is that we just get a good number and continue onwards and upwards. Yeah, I mean, if you have a buy the rumor, sell the fact, and the fact doesn't come through and the number becomes worse, I guess then we could also get a sell-off as well. But the sell-off then in that case might be a bit more aggressive. But yeah, at the moment we're probably going to be a bit of a holding pattern until we get that number. Don't forget, CPI is not the Fed's preferred measure of inflation, and they claim that they don't even look at that one. They look at the PPI. But yeah, so just bear that in mind. Also, the jobs number. I mean, if you want to hear a full breakdown of how great in inverted commas the jobs number is, you just need to listen to Peter Schiff's last video. I mean, it pretty much confirmed a lot of stuff that I was thinking. That obviously a lot of these jobs are going to be part-time jobs, so a lot of people getting extra jobs, 2, maybe even 3 jobs for some people, and then they are doing this because they are struggling with inflation and costs and all that cool stuff. So like, what's the headline number, and the headline is obviously not even the U6 number, it's the U3 number, the headline which excludes a lot of things. The headline number is somewhat misleading. And then don't forget, like, if a lot of these jobs, if we just assume like a certain amount of people in the workforce at any given time, yes, fair enough, we have more jobs, but like I said, that doesn't even take into account whether jobs are part-time or not. Say we have like a certain amount of people working a certain amount of hours, so we've got more people with more jobs, maybe we're getting more people working more hours, but if that percentage of more hours that people are working, and then yeah, fair enough, wages are going up also, but then if those wages and those hour times by those hours of working is not going up by as much as inflation is multiplied by the amount of hours they're working, then they're getting it. Then even overall, the net result can still be basically be, well, a weakening economy, weakening purchasing power from all the people that are employed, even if there's more people getting employed, because even then the cumulative amount of money they are earning is less on a real basis rather than just on a nominal basis. So yeah, I don't think the jobs number is good. Lots of things are hidden, lots of things are manipulated and excluded from the jobs number. But yeah, what I will say is maybe the market does know this, because the market didn't really sell off on the I mean, initially I had a pullback and now we're right back up there above this resistance. The market didn't really, I mean, the market isn't stupid. The market is basically the cumulative mind of all the participants, and yeah, continuing onwards and upwards. Maybe they do. Maybe obviously more people than we give credit do understand the soft underside, and then when we kind of look at media talking heads, just people on social media, general people, those are the people that potentially don't. Well, they're not the multi-billion, maybe even $trillion fund managers, are they? That are actually driving the market based on what they believe. So, yes, there is that. Let's look at the DXY. DXY actually looking like it's wanting to put in a higher low here. And then that could equal a higher high. If we do get this higher high, it is going to be an absolute disaster for markets. Do I think that's going to happen? Probably not. But we shall see. We shall see what happens. But this is constructive price action thus far. So obviously we need to watch that move in the DXY. I mean, a lot of people are basically saying the DXY is not as important because a lot of it is against the euro, which is obviously getting wrecked because of what's going in the euro. And just looking at literally what is in effect predominantly a dollar-euro pairing is not the most interesting thing. And then also we've got the Japanese yen in there, which is also has been pretty weak keeps saying also. But yes, so maybe this move in the DXY is not as much of an indication of an aversion to risk as it is just the constituent parts are collapsing against the dollar. So yeah, 10-year 2.8 handle. It is also looking like it wants to try and put in a bottom here. However, this chart is a lot less positive, a lot less bullish looking than the DXY chart. The DXY chart is clearly a lot more bullish than this chart. So this is going to have a lot more resistance, I think, with moving much higher. And ultimately, I don't think famous last word. I don't think we'll get through this 3%. I think we top out and then come back down, take this out, and then come lower. But yeah, we shall see. Obviously, inflation numbers could have a go at that. Gold bounced into support, holding above at the moment. This is obviously the jobs number here. Obviously, potentially making the market think the Fed was going to have to do more tightening than what they were imagining. So obviously drove gold down, and the gold bounced off that support. Not too much else to look at there. Oil 88 handle below this large important area of support, below all these recent lows down here. So yeah, all the insane commodity oil bulls all over FinTwit. Since basically this whole shenanigans are all getting ground down. But yeah, when the whole market is one way, it is a relatively decent signal that especially when they're so vocally one way and so confident, it's a decent signal that, well, it's not like the market makes them look like an idiot because it goes the other way. It's just like they've all bought and they're all in. So there's on the margins, there's less people left to buy in, and then the people in there start to sell. As they're either in profits or they start to see the price coming down, they start to sell into the pullback to lock in those profits, and then that's it. And the market goes on a downtrend. So that's currently what's happening. I mean, this is the big area where I mean, if we get below $60, that would be insane. That I personally, well, things are never that simple. Get below here, it would be great for obviously inflation and the price that we're paying for petrol and that, or gas is called in America, fuel for your cars. But also it would be indicative of we are in a pretty severe recession if there was that amount of demand destruction. So yes, there is that. But yeah, so basically, I think we could have a good chance of trading within this range if we are going to stay weak. But yeah, see what happens. This is good though for inflation. This will start feeding through to numbers, month-on-month numbers, and yeah, could start to help us with our risk assets. Ethereum Satoshi pairing. If we just zoom out a bit here, you can see above this resistance area here, and then we have got this resistance area here. We'll just extend this along. So yeah, we have actually wicked practically into it. So yeah, this is the next target basically. Extend this along a bit as well. This is the next target. Get through here. We will be looking very good, very good. I think I was saying the 0.08 handle just to give us a bit of a more of a rounder number, but yeah, it is mainly this resistance here. Then we kind of bust out this whole big range, swung failure below, blast straight through, and then yeah, I mean, we could see a move substantially higher. We know we've got massive catalysts. We know lots of people are BTC max lists. We know lots of people that aren't. Like Finance 1.0 people, they kind of just see Bitcoin and everything else as just massive risk. I think once, so basically people don't necessarily assume the actual merge will go to plan, or some people don't think it'll even happen. So I mean, literally when it actually does happen and starts and is all up and running fine, then I think we'll actually see further buying into Ethereum. We could go on a massive run, as I basically have been saying forever, literally forever. I'm a broken record on Ethereum. We are ETH maxes. No one cares about Boomer coin. So yes, what else? Not much else. Oh yeah, the USD pairing, obviously for this, hitting into this very particular important area of resistance, which will be followed by just one other particularly major area of well, I say of resistance for this, looking like we potentially put in a bottom. Once you get above here, we could then obviously find ourselves back into this nice range, and then deciding if we're actually going to trade higher. But yeah, these areas here, very good to get above these. We could then look like we had put in the low here, which I am in my mind, not that this matters for anything, about 90% sure we won't see below here. Just because even if we do get severe pullbacks in markets and Bitcoin and risk assets generally, I just think we are going to be operating from a higher base come next month with the merge. Therefore, price getting down here won't be just won't be as possible, because we would have had basically like however many halvings it's equivalent to. Yeah, let's look at those stochastics now. They've got to be looking all right, haven't they? 4 hour, yeah, looking constructive here, turning back up, got a decent amount of room to run, so that's a good looking read. Yeah, 10 hour pointing up, had a bit of a stutter but pointing up, so that is good. 12 hour, yes, lots of room to run on the 12 hour, very good looking read there. Daily was looking a bit weak, but has turned back up, and so that is also pointing up again. By daily was stuttering a bit, but is pointing up again. 3 day looking absolutely great here. 5 day looking good. Weekly looking good, as the weekly can do. Obviously still at a low level, but obviously all the pitch to run into bi-weekly turned up as well, and obviously waiting on the monthly. So I mean, overall this stochastic read is pretty phenomenal. We don't get much better than that. Mostly all turning up across all time frames, also some of the larger time frames from lower levels. So yeah, I mean, the market is expecting us to have one more leg up and then pull back. Yeah, that is potentially true. How much of a pullback, or will it be a grind sideways, or what will happen? Will we get wicks low that are bought up pretty quickly? We shall have to see. We're not too far away from a move up towards this 26.5k, but ultimately the market may shock us and get up to around 30k soon, then pull back. And then we'll just assess what happens there. Do we put in very nice significantly higher low relative to these lows, and then obviously that is when the major players will move in. They'll be looking at weekly time frames. They'll be looking for a low and then a pullback and then a higher low confirm. Once that higher low is confirmed, that is when they start to pile in. So yeah, that is basically what we've got to wait for. But if we do look on a weekly, lots of time to transpire before we get their pullback and then a high low, and then moving onwards and upwards. So yeah, that is it. A bit of a longer ramble on this morning. So yeah, remember that is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.